this is just a quick informational just presentation about multifamily in San Diego. Been in the space since early 2018. Actually started when I was still at San Diego State, but learned a lot from the connections I've made, the investors in the area. I've been able to work with, some of the biggest investors here in San Diego and help them buy, acquire, and sell property with them. Started at South Coast Commercial, where I learned a lot of great information, but yeah, basically had no clue what I wanted to do, but fell into real estate because I saw that a lot of people who were living well had rental. They all owned rental properties. They all had cash flow. They all had financial freedom. They all had some sort of income besides their regular job. So yeah, I mean, my career kind of took off in 2020. In 2021 and 2022, I've been a part of more transactions than any other broker in the county. I haven't sold the most amount of volume, like millions wise, but transactional wise, done about 100 the last 2 years. We specialize in 1031 exchanges, so we make sure that at JLM Real Estate that if you're going to sell your property, you have a clear plan of action that you're going to execute in order to improve your portfolio. So we always make sure we have a property you can buy, a property you can look into to maybe go from 4 to 8 units or 8 to 16 units. Our goal is to increase your net worth with every transaction.
So you came, so background though, to step back, you came right out of college into real estate?
Yeah. I started hitting the phones, 10, 12 hours a day when I was a full-time student my senior year.
Okay. And really that's kind of how most people get started in your business, right? I mean, they put you in front of a phone, they give you a list of names to call, and you just start pounding those phones.
Yeah. That's how it started. Yep.
And how long did it take you? So I like to give people an example. How long did it take you to close your first project or sale once you got started?
Oh man. It's a funny story actually. So it took me about 6 months to get my first listing, but after I got my first listing, the owner unexpectedly passed away the next morning.
Oh no.
And the property went into probate.
Okay.
And so that was
so for viewers that don't know what probate is, explain probate.
Yeah, in the simplest terms, a property goes into probate when there's no trust or will for the heirs. So let's say the father dies and there's no will or trust for the family, then the property goes into probate, which means the property is now controlled by the county or the state. And in order to get the property back into the owner's hands or the heir's hands, it takes about 1 to 2 years with a probate attorney to solve that issue.
So just not to go on a side tangent here, if you own real estate, make sure you have a trust and it is clear as to what is going to occur upon your passing, what happens to that real estate. Jason, how often do you come across these kinds of deals?
Oh man, I see them a good amount, and it sucks because it can be avoided by everyone, right? If the estate planning was done properly. But yeah, I mean, I see deals like that come up a good amount on the MLS.
Yeah, I see it too. So not to go down the tangent. So, all right, so you're out of college. It takes you 6 months. You finally find your first listing. He passes away. But how many calls do you think you had made by that point?
I mean, I was making at least 100 a day for 6 months. So whatever that math comes out to.
So for those that think that getting into real estate is easy and it's a get rich quick scheme, it's not. It takes a lot of work and a lot of effort, but what you're going to find out with Jason is it paid off, and it paid off well. So I'll continue. I didn't mean to break in there, but I love to hear that beginning story of your career.
Yeah, no worries. Thanks so much for chiming in. Yeah. And like I said, I learned from my investors that wealth isn't created by, creating commissions or creating money from your day job, because you get destroyed in taxes anyway. So the way that a lot of people have been able to shelter their taxes is through owning real estate. And that's why I really went all in on buying real estate. And my partner and I own over 100 units in San Diego County, and built that since 2020. So
you might be asking, how old are you?
26.
Yeah, that's impressive. All right, so you've got kind of two things going on here. You own your brokerage. I've been to your office, very nice office downtown. And you also have a second facet of your business where you buying and and are you rehabbing and flipping? Are you rehabbing and holding? What in your own deals?
Both. Yeah, honestly, both. A lot of the properties we bought have actually just been off the MLS or been from other brokers that have brought it to me. But yeah, I mean, it's kind of a mix of the two. Usually if it's a smaller property, we'll look to flip it and do a 1031 exchange into a bigger asset. But if it's a larger asset in a good location, we'll look to hold it long term.
Okay. So, when I talk to new real estate investors, there's a progression that usually happens in a real estate investor kind of career. First, it might start with wholesaling. Wholesaling is kind of identifying opportunities for other investors and then essentially acting as, kind of like a broker, but identifying opportunities and then selling that opportunity to another investor. Then they start to buy their own deals. And usually it's a single family home and they're flipping those properties. But usually then maybe they're holding one or two and then flipping the rest. And then they progress into kind of larger transactions, which are multifamily. You kind of skipped that whole wholesaling, flip a house. You went straight to buying multifamily properties.
Yeah, exactly.
Yeah.
Yeah.
So if you were to tell somebody today how to get started, and I'm jumping ahead, what would you be telling them how to get started in real estate? Would you say go down your route of becoming, brokering deals, going out and trying to find your own stuff?
I would say, if you're starting from nothing, it depends. If you have no money, no knowledge, you have to gain the knowledge through, working as an intern or working under someone in the services business like yourself or me that will teach you how to service investors. And so you can learn the lingo and learn how to execute, learn how to serve the investors, right? So once you learn how to serve investors, then you can actually see how they think, see how they work, ask them questions. So that's how you gain knowledge really, really fast.
Yeah.
Find
find that mentor. Someone that's doing deals, successfully doing deals. I agree with you on that. And I forgot to mention, if you guys have any questions throughout this entire webinar, feel free to use the Q&A at the bottom, and I'll manage that for you, Jason. And then we'll go ahead and answer your questions as they come in. But please ask questions. Jason has a ton of knowledge. It's really interesting, his perspective on multifamily. So with that, Jason, go ahead.
Yeah, no worries. So here's why I believe in San Diego multifamily in particular. So this stat I heard at the Apartment Perspective, which is the biggest apartment convention here in San Diego that happens every September. And a report from Sandag, a San Diego housing provider, they stated that by end of 2022, San Diego is over 70,000 housing units behind on meeting the demand of people who need to have housing here, want to live here. And in the past 3 years, 2020, 2021, 2022, developers have added a little over 5,000 units per year. So that gap is only widening. It's only getting bigger. We're simply not building fast enough. As you know, with California, San Diego laws, it's very tough to get permits to build. It takes a very long time for developers to get through a lot of red tape to actually build housing. So it's great for investors, not great for renters. And no matter what happens to the economy, people will always need, somewhere to sleep at night. With office, retail, industrial, businesses fail, businesses close down, but no matter what, people always need somewhere to live.
I'm gonna and let me reiterate point one on there. You have to understand how undersupplied San Diego is in terms of housing, and they'll never ever catch up. There isn't enough development going on in San Diego. Now, do you think that will balance values long term? I mean, does that go right into kind of where real estate values are trending, no matter kind of what the volatility is right now?
Yeah, I mean, it's just so tough because, which I'll show you in my next slides with my charts, but it's just so tough to see, rents ever going down or prices really plummeting because there's a lot of demand for renters and for people looking to own real estate here.
Yeah.
And like you said, there's only so much land. Like we have Camp Pendleton to the north, south, we have Mexico, to the west, we have the ocean, obviously, and to the east, it's just desert, right? So San Diego doesn't have a lot of desirable land, and a lot of people want to be in the desirable part of San Diego. So if you own in great locations, it's almost impossible to lose.
Yeah.
Yeah. But yeah, like I remember working during the pandemic, and I remember myself thinking, wow, like with COVID going on, there's no way anyone's be paying rent in March, April. Like I thought the market was going to crash in the beginning of 2020 when the COVID hit, but the exact opposite happened, as we all know. And even in the first month, like March and April, 96.2% of renters paid rents on time in San Diego County. That's when like no one was working. People thought the sky was falling. And still people were paying their rents. Very few were not. So I just want to show you just data from the biggest commercial real estate data analyst company in the world, CoStar. So they did a market survey end of 2022 for San Diego. And this is the sales volume and market sale price per unit. So as you can see, 2022, the market dips a tiny bit for multifamily, and they're forecasting to dip a little bit until the end of 2023, but it's very, very minuscule, very small. The green is the United States, but the blue is the San Diego price per unit. And as you can see, sales volume has gone down tremendously in Q3, Q4 of 2022, and projected to go down a lot this year as well, just because there's less buyers in the market. But overall, from this chart, I see that there's very little, CoStar sees a very little forecast of dropping values, nothing crazy, and they'll see a steady upswing, past 2023.
Now, what we see in the single family side is a limited supply of just listings. Do you see that on the multifamily side?
Yeah, I mean, there's just not a lot of sellers out there. I feel like it's been this way ever since I started. I mean, there's not that many. I mean, people tell me like ever since like 2013, like sellers have had all the power, and people don't have much distress here. People have a lot of equity in San Diego, so the household income's going up every single year. So it's just, yeah.
Now, back on that slide though, I mean, how much do you think of, you show the number of sales are more of because there just isn't any listings versus, stuff that's just stagnating on the market?
Yeah, it's more, there's not that many listings coming up. There's some properties that are overpriced that are sitting, but mostly it's just like, there's just overall less buyers, less sellers right now, actively transacting at this point.
Wow. Okay.
But we're still making deals happen. We're still seeing deals close. So even though there's a drop off, there's always property selling every day. I thought this was really interesting. The core, job market for San Diego, it looks like the median household income they're projecting for the next 5 years to continually to rise close to 110 per year. Mm-hmm. In 2022, we're right at 95,000 a year average income. So, as wages go up, so do rents. So that's another big indicator that rents will keep going up as well. Another big data point, because I know a lot of people talk about this. A lot of people say that the doom and gloomers say that there's a ton of delinquent loans coming due. There's a lot of people that are in pain, but just look at since there was a spike in 2020 because, it was the pandemic, but ever since 2021 and 2022, it's been extremely low. There's not that many, there's very, very little delinquent loans by pay status, and there's not that many people in pain in San Diego. So that's kind of just what I wanted to highlight, that there's not that many foreclosures, quote unquote, that are coming. I mean, in 2008 to 2010, CoStar also put out a stat that there's only 8 foreclosures that were given back to the banks in that period for multifamily properties in San Diego.
Yeah, it's interesting because I mean, your graph kind of shows the spike, but look on the right hand side, the delinquency rate. I mean, you're still sub 1.2%. I mean, it's nothing. That's effectively zero.
Yeah. There's a spike down, but yeah, even at the highest point, it's less than 2%, right?
And so, when I got into the industry back in 2008, I mean, that's all I was lending to were people that were buying foreclosures. That was it. And now it's completely changed. There just is no foreclosures for any of these investors to really buy. You always hear about funds being created, putting money together to take advantage of foreclosures. And they just don't come around.
Yeah, no, 100%. Couldn't agree more. Yeah. So for cap rates in San Diego, this is the biggest determinant of value for commercial real estate. So for multifamily, they're forecasting cap cap rates to stay very steady. A lot of people tell me, a lot of investors think that because rates go up, that cap rates automatically go up. It's not the fact. They're not directly correlated. So as you can see, since 2013, cap rates have gone down. They're expecting a tiny spike to the 5% range, but expecting to be very steady. Oh, and sorry, I'm looking at the US. This is San Diego right here. So right now in San Diego, we're at like a average for good product, like high 3.8 cap rates for properties that are selling. So still extremely low cap rates.
Yeah, Jason, I think that you bring up an interesting point. I would have thought cap rates would have gone up simply because how banks underwrite, they look at cash flow, they look at net cash flow on the property, and then they'll lend, their lending parameters are typically based upon net cash flow. And so in order to meet certain LTV ratios, either you're buying the property at a lower price or your loan to value would go down. So instead of banks lending at maybe 80% or higher, they're going to be more at 65 to 70.
Yeah, and to add a real world example to that, we have 3 deals in escrow right now that are that are right in the 4% cap rate range, right around there. Wow. And all those clients that I'm working with, they're all putting 40-50% down. So I think if it's good real estate and they think that there's upside and overall, I think people are still want to pay the high prices, even though they need to put more down. But who knows? Like I said, this is a forecast from people that are way smarter than me, from economists at this company that follow every transaction, that are talking to all the big owners, big economics. So I think cap rates will go up a little bit this year. Maybe I'm seeing transactions happen in like the low 4s, sub 4s for like the beach, but the lesser markets like East County, I'm seeing properties trade in the high 5s. So I guess we'll see.
I look at it this way: people are buying for future, right? I mean, yes, you're not. I could go out to the Midwest and get probably a much more attractive yield today. But you're not going to get that appreciation, that rent appreciation and equity appreciation versus here. Yes, if you're if you got a property on the coast, rents are, on average, are going to increase. Yeah, 100%, 5%, and that's what you're buying into.
Exactly. And then this is to show the market rents in San Diego. As you can see, we had what happened there? As you can see, we had a huge spike since 2020 right here. But even before then, they went up very steadily, and they're expecting a similar kind of increase when things normalize in the next 5 years. So like Brock and I said earlier, there's just not enough supply. I mean, I have 2 rentals that have to be, one in Chula Vista, one in Pacific Beach, that I'm renting out, and there's over 15 applications on both those units. So it's just bonkers, and they've only been up for about less than a day. So people need housing in San Diego. So here's what to look for when buying multifamily. These are some key metrics that I really look for when I'm looking at my own investments or for clients. You want to have a clear goal in mind, a clear plan of action. I think there's too many investors that try to get started who don't really know what they actually want to do. The best investors that I've worked with, they all have a clear goal, a clear plan of action, a path that they want to follow. Like, for example, are you looking for a value add opportunity or a property that's already fixed up where you can slowly raise rents in the future? So it depends. Like, do you have the time to do a lot of renovations, or are you a high income earner that has a successful business, or doctor, attorney that would rather own a property where you can slowly raise rents that's already renovated, Class A property in good condition? Do you plan on being a sort of a small scale developer? I'm seeing a lot more investors have this kind of action plan now. I work with 3 or 4 that are very active in the space of building ADUs, adding more units to the back.
And Jason, can you explain for some of our viewers, what is an ADU and why is that so important now?
Yeah, it's probably one of the biggest opportunities in San Diego still. It's still early, but ADU stands for accessory dwelling unit. And basically, it's like where you can do a garage conversion or add units if you have a single family home Even if it's past the FAR, which is the floor area ratio of what a zoning will allow. San Diego is extremely friendly to add more units because they're very aware of our housing crisis. So the process for permitting ADUs or an extra unit to your property is a much faster process than getting actual construction plans to build a 10 or 50 unit building. I've converted 3 or 4 garages into ADUs, and the plans took about 4 to 6 months to permit, whereas construction plans for big developments take anywhere from 2 to 3 years. So it's a great way to add value to your property. It can be ground up or a garage conversion. If you're in certain high transit priority areas in San Diego, like North Park, Hillcrest, University Heights, some parts of Golden Hill, I know clients of mine that are buying duplexes and adding 7 ADUs to the lot.
Wow.
It's all like, it all depends on the property and the zoning and the lot square footage. But yeah, if you have any more questions, I can go into.
Do you think though that that's adding to keeping cap rates low? Cap rates being cash on what's currently there, and so people recognize the fact you could build 5 more units and quadruple the cash flow. Yeah,
like going in for sure, people are paying prices where the cap rates are low because they see that
it doesn't even matter. The cap rates at current don't even matter to them.
Yeah, what they care about is they care about what am I buying the land for? What's my construction cost, and what can I sell for when I'm done? That's all they care about. And if the numbers make sense, it makes sense. Some people are more aggressive than others, but I've seen it work really well for a lot of people.
I agree. I've seen it. We financed a couple of ADU projects, and they did so well on these projects. And it's a great way, and it's something you can continue to add on to your property. So if you don't have the cash flow day one, you build out 1 unit and build 2, 3, 4 units thereafter. So, and the city is going to continue to push this ADU trend. Again, they can't get permits done quick enough for construction, so they're kind of circumvented that to make allow for ADUs.
Exactly. Also, like, you have to understand when you're buying multifamily, you have to understand what locations you're looking to own in, what areas can you actually stomach. I know some people only look in North County, some people only look in core San Diego. So everyone's different. I'm more about the numbers. I'll look anywhere if it makes sense, but I know some people are very particular about their locations, which does matter a lot. And also, do you need partners? I know a lot of people might not have the funds to maybe buy your first property on your own. So can you get partners to help you with the funding, to maybe help you with knowledge in your first property? Like my first property we bought 50-50 with a partner that I had, but he knew a lot more about investing than I did. And he kind of fast tracked my learning curve of owning and operating property. So that really worked well for me.
So would you be open if someone found a really good opportunity and wanted to partner up possibly on it, maybe not earn a fee on the front end, but to say, hey, keep me in as a silent partner so I can watch you? Is that something that you'd consider?
Yeah. We've done deals like that before. We've given someone who asked that, an agent brought us a deal and they wanted some equity, and yeah, we give them equity for breaking the deal. Yeah.
Cool. I got a question here. Question here is, what kind of activities or marketing do you do to find these kind of multiplex sellers? What are you doing out there to bring sellers in?
Yeah, I mean, my team and I, we have about 9 people. We all do the same thing. We just look on. Yeah, we use the phones a lot. We're going to events, we're networking with people. A lot of my business is now referral based, but when I first started, it was all just like calling and asking if they're looking to buy property, looking to maybe sell property. So that's how you got to get started. Also, a good way to stand out is, being active on social media. I think being active on platforms, as baby boomers age and as people that are actually on Facebook or on Instagram inherit these properties, if you're an active agent broker that's actively advising on multifamily properties or any properties for that matter, they'll see you as a thought leader, as someone who understands, who's an expert in the field. So that's like a long game.
And for our viewers, if you do use Facebook, Instagram, or LinkedIn, make sure you look up Jason Lee. He's everywhere. He's providing free advice on everything you're hearing today on his social media. So definitely find him on social media because he has some really good content.
Thanks, Brock.
Yeah.
Next point is probably the most important point is I've seen a lot of people make offers on properties or want to without actually understanding all the values that that zip code or submarket is selling for. So I've had some clients that have called me wanting to make offers and they want to write at full price. And I thought it was a little overpriced. So I kind of sent them all the comps to make sure that they understood the values, and they started a little lower and still got the property on the contract. But I think the most important thing as an investor and the way to not lose money is to never overpay. Like, you never want to be the highest paying buyer in your neighborhood. You want to be the one that was a little bit lower, maybe 10, 20% below the comps, where you can add value. That's how you can walk into equity. That's how you can really make a lot of money on your investment. Yeah, I mentioned that. And here are the key metrics for those of you that might not know how to value multifamily or how we value it. I just want to kind of show you the math and the numbers. It's pretty simple, but I think it's good to go over. The cap rate, this is the rate of return on a real estate investment property based on the income that it generates in correlation to the price you actually buy the property for. So in simpler terms, let's say you buy a property for $1 million. If it's a 5% cap rate, your cash flow per year after everything will be 50 grand a year. So 5% of $1 million. Simplest way to explain that, but
that does not include, that's a good point, but that does not include cost to finance.
Yeah. That's if you bought it all cash. Yeah. If you bought a $1 million property all cash, and if you take the rent minus expenses divided by the purchase price, it gives you a 5% return. So that's the calculation. The rental income per year minus the expenses per year, not including the mortgage, like Brock said, divided by the purchase price times 100 will give you the capitalization rate. And then the other most important determinant value that I use every single day to value every property is called the gross rent multiplier, GRM for short. This is even a simpler kind of metric. I like it better than cap rate because with a cap rate, you can kind of modify the expenses. Yeah. People call it broker underwriting to make the cap rate look better. They'll make the expenses lower than the actual operating expenses, like on projected, and it makes your cap rate go up. But with a gross rent multiplier, you can't modify it because it's just the ratio of the purchase price to the gross rental income per year. I think it's the best determinant of value for multifamily, and the calculation is very simple.
I don't hear that often, but it makes perfect sense.
Yeah. It's used as a key determinant of value, and it's purchase price divided by the gross rental income per year. Just to give you an example, like if you're let's say you are looking at a property in Pacific Beach versus a property in City Heights. In City Heights, your cap rate will be a lot higher, and your gross rent multiplier will be a lot lower than the property in Pacific Beach. Because when the gross rent multiplier is lower, that means the rate of return is a lot higher, because the gross rent multiplier means that the gross rents per year will take, if it's an 11 GRM, it'll take 11 years to match the purchase price. Okay. So the higher the gross rent multiplier, the lower the return, which means lower the cap rate.
So you're saying in your example, the GRM again is higher where? In
a nicer area like Pacific Beach, the GRM is a lot higher.
Yeah.
Because the return is lower and the cap rate's lower as well.
So what would be an average GRM in San Diego? I know you've got certain regions in San Diego that'd be difficult, but
like middle tier, I'm 14, 15, somewhere around there.
So 14 to 15 years to pay off based upon gross rents.
Yeah, gross rents. Okay. Yeah, pay off the purchase price. Yeah. It's just used for, I never look at a product like that. It's really like, if I'm helping a client, let's say every property in Pacific Beach is selling at a 17 GRM. If everything there is selling at a 17 GRM, I'm not going to advise my client to buy an 18 GRM. That's kind of what I use it for, just to make sure that my client's not paying too much for the property. And then price per square foot, that's just the purchase price divided by the total rentable square feet in the building. That's mainly used for residential, but it's also helpful for multifamily because you never want to be paying a higher price per square foot than other buildings in the area. So I use it a lot as well. Price per unit is probably the worst determinant of value. I know a lot of people go based on price per unit. Like a lot of my clients will say, oh, well, I want to pay, $450 a unit for Pacific Beach. It's too high. But the reason why price per unit is so skewed is because you have to look at how big each unit is, how many bedrooms there are per unit. So you have to look deeper into the property before just valuing it on the price per unit. Of course, condition of property matters a lot. I'm not going to compare a brand new renovated unit with all market rents versus a property that's needs to be gutted with half the rents that are to market. Number of bedrooms, also very important, like I said. Any questions, Brock?
No. I mean, this is all interesting stuff. And obviously, this is why I go to an expert like you, because I don't know this piece of the business as well.
Yeah. So of course, everyone's talking about interest rates. So I just want to show you what I'm seeing and what other people are seeing and what data is saying. So what I've seen and what a lot of brokers that I work with have said is we've seen an overall decreased buyer activity. We've seen a lot of investors going to Class A locations. Like we're still seeing properties by the beach fly off the shelf really quickly. I just sold a 10 unit in Carlsbad, a few blocks from the ocean, and that property went very, very fast. But if you look at properties that are like more East County, those properties are sitting a little more. So a lot of people are flocking to Class A locations. And the initial shock of rates going up is really subsiding. In Q3, Q4 of last year, our business was really slow. Still getting deals done, but not a lot going on. But I've seen a lot of activity pick up. A lot of people come back into the market in Q1 of this year, January, February. So
I would 100% agree with you on that. Well, I mean, our lending, we actually kept pretty busy late last year, but I mean, January hit, and the amount of loan requests that have come into our shop has probably tripled. And it just, again, It goes to this idea that this activity is happening. And I don't think we talk about, I always talk about all this noise the media has out there about how the housing market's going to collapse. And, there's always statistics. I think San Diego is like the #1 housing market to collapse. And you just don't see it in the numbers right now.
Yeah, I mean, the same people making those articles are, I saw one from Goldman Sachs, and Goldman Sachs is making all cash offers on houses in San Diego. So, it's like
leave it up to Goldman Sachs to do something like that.
Yeah. So is it fake news? Probably, if they're looking to buy here.
So I got a question that came in here. So #1, gentleman said that he's got a 12-unit apartment, or 12 meeting. So he'll connect with you later. And then, so how do you recommend someone getting started in this market? I think the question is like, how do you just find your first deal in San Diego?
Yeah, I'll talk about it more as well, but finding your first deal in San Diego, you just got to you got to have a good team around you. I think you got to have at least 2 or 3 good broker relationships. You got to know a lot of, not a lot, but a few good banks, a few good lenders like Brock who can close quick. And, the banks that can give you long-term financing, like Chase Bank, First Republic, are great multifamily lenders. So I think the first step is to have a good team around you and to educate yourself on what properties are selling for in your area that you want to look in, and then meet with an advisor like myself and basically go over your budget and go over your goals on what will, give you the highest return possible and hopefully achieve the investment goals you're looking for.
Yeah.
So I think having a clear plan of action and then taking action is the most important thing to do when starting from scratch.
Yeah, and I know we kind of skipped ahead, but you make a point, take action. #1, you got to go out and you got to do it. Go find your network of people that are going to help you get started, and then just go do it. So go ahead, keep going on our interest rates. I'm interested in your perspective here.
Yeah, for sure. Like I said, the initial shock is subsiding. Sellers are holding really strong. I mean, I'm talking to sellers every single day. My team's talking to sellers every day. There's just not any pain out there. I mean, people, like I said, have a lot of equity. Sellers don't care if rates go up or down. They're still cash flowing a ton every single month, and they don't have a reason to sell. The biggest reason why people sell is because of major events in their life. So, death, divorce, disease, partnership disputes. So, for those kind of sales, we're seeing motivated sellers, but unless that happens, we're not really seeing a lot of pain out there. No reason to sell.
What about just like general 1031, people just exchanging properties? Are you seeing those types of transactions?
Yes, but a lot less. a lot less for sure. A lot less exchanges happening right now. I think in
And you know
2021.
what? And I'm sorry, for those that don't know, Jason, can you explain what a 1031 exchange is?
Of course, yeah. A 1031 exchange is basically something that's in the IRS tax code that allows an investor to trade a like-kind property for another property. So it basically means if you sell an investment property, you can buy another investment property without not paying, but deferring capital gains tax. A lot of people say it's tax-free, but it's not actually tax-free. You're deferring the gains, but if you do cash out later, the basis does follow you. So a lot of the top investors out there will basically, it's called swap until they drop. They'll keep exchanging their portfolios. And then, once they pass the assets to their kids, then they get to step up in basis and goes from there. But it's the most powerful tool to grow your portfolio. It's how I've done it too, and how my clients are right now. The key rules you need to look for is when you sell a property, you have 45 days to identify your next property after your property closes escrow. And then you have 6 months or exactly 180 days to close on your up-leg property. Some rules that people don't really talk about is you have to take on the same amount of debt or more. So if you sell a property for 1.5 million and you have $1 million worth of debt, you have to take on $1 million worth of debt or more, or it's not a valid exchange. You also have to pay a purchase price of equal or greater to the property you sold. So you sell a property for $1 million, you have to buy a property for $1 million or more, or also get taxed on the difference if it's a lower price. But yeah, hope that was a good summary there for that. Buyers are wanting a big discount. So we're seeing like buyers are down here, sellers are up here. We're trying to bring them together, but sellers are staying up here. And like the pandemic, right? When 2021 hit, buyers just kept coming up and up and up, and the market kind of went that way. So we'll probably see a similar trend, probably not nearly as drastic, but probably normalized transactions. I think, there's too much pent up demand. Buyers want to own more property in San Diego. So if sellers aren't going to provide discounts, then buyers are going to have to come up the other way. And how we can add value to you as an investor. The number one thing that we provide that many other brokerages don't in our area, a lot of the big firms out there, they kind of have one way of doing things. They either list the property or they won't work with the seller. We kind of take the route of trying to help and get creative no matter what the situation. A lot of people actually don't want to put their property on the market for several reasons, even if they want to sell. A big reason is that they don't want their tenants being disturbed by looky-loos or people that aren't real buyers. Sellers do not like their tenants knowing they're selling. So that's a big reason why sellers never like to market their property in multifamily. A lot of the time,
these transactions happening somewhat off market, may not be marketed unless you're kind of in the know.
Yeah. So like, for example, I'll talk to a seller for 3 years. They'll be ready to sell, but they'll tell me, hey, Jason, I'm ready to sell, but I don't want to put the property on the market right now. I just don't want my tenants knowing I'm selling. They're going to get spooked. If you have a buyer, let me know. I want X for the property. And I go, okay, that makes sense. That's market value. And then I'll bring a buyer at the price they want and it'll make sense. Another big example is a seller will have an agent that they've worked with for over 20 years, but will allow my firm to bring a buyer, our investor, at the price they want. And usually the other agent is also older, kind of retired, doesn't want to do work, and they'll be happy that I bring an offer because it makes their job easier. Another example why, there's many more examples, but the main three are the last one I want to go over is partnership disputes. So just not being ready to sell yet. They're kind of going through trust issues, LLC issues, legal problems, and I'll kind of bring an offer before that happens, and the attorney will advise on a price that they want to look for. And then that's how the process will happen. So as a buyer, if you're watching this adds a lot of value to you because I can bring you a deal, months before it actually comes in the market. And when it goes in the market, that's when the competition comes in. And that's why it's so hard to find a property to buy, because there's so many buyers in San Diego. So our firm has built relationships with a lot of investors by helping them kind of skip the competition, have a leg up on anyone else that's looking. And also a lot of brokers kind of say, thanks for the commission, have fun with the process. We're just here to help you buy and sell. But, as an investor myself, I also advise on all parts of the buying process. So we advise before by telling you that making sure that you won't overpay for the property. Of course, we advise you during the transaction, but most importantly, we advise after the buying process. I have 2 or 3 amazing property managers. I have 2 or 3 go-to lenders, long-term financing banks, great contractors that we work with, appraisers, trust attorneys. We have a lot of relationships with great people that can help you better your investment and help you elevate your portfolio. So like I said, we own properties, so we can advise you as a broker and as an investor as well.
Yeah. Yeah. I'm glad that, you kind of do have experience on both sides of that. You can view it as the investor yourself.
Yeah, because there's a lot of brokers out there that are in commercial real estate that don't actually own property, they just sell it.
Yeah.
So if you don't own it, you don't really know the challenges that comes through owning a property, because there are, challenges that come up. And Brock also wanted me to add some information about some, deals we're working on. So
yeah, why don't you quickly kind of go over how many projects have you bought yourself?
Yeah, so the past 3 years, we own 17 right now, but I've bought a total of about a little under 30 properties. We've exited a lot.
Okay, so you own 17 now, and these are all you've gone in with private investors to buy up these properties?
The last 4, but before that it was just me and my partner.
Okay.
Kind of just trading. Yeah, just me and him. But yeah, we started recently about a year ago.
Okay.
And they've all gone really well.
And what would like a normal, if you were to invest in one of your property projects, what would it look like?
Yeah, so it would be a 8% preferred return, and then it's a 60-70% split to the investor. Sometimes 80 if the deal, if it's an easy deal. By easy, I mean like not a lot of renovations, no development, nothing crazy, not a lot of work. And then 30 to 40% will go to the general partners like myself. So limited partner is a passive investor. It's where you wouldn't have to do any work. You just get an 8% compounded return a year. And then after that compound return is met, then the waterfall split 70%, 30% starts. The minimum IRR, which is the rate of return per year, is 15 to 20% return a year minimum. Our business plan is to only buy great locations with good upside in the core regions of San Diego County. Example deal we just exited, we're exiting right now. We bought a 4-unit in Chula Vista for about $1.3 million in September. We spent about $200K in renovations and are now in escrow to sell it for over $2 million. Wow. And the IRR to everyone that's involved in the property was 57.6%. And yeah, that's really it. And then that's just my contact information on how to get in contact with me. But happy to help you if you're looking to invest actively or passively. I'm happy to help in either way. Very
cool. So, and back on that example, about how long do investor capital get locked up in these deals?
Oh, it depends on the business plan, but it can be anywhere from if it's quick, 6 months. If it's longer, if it's a long-term hold, up to 5 years. If it's a cash flow opportunity.
Okay, and they would come in as an equity or we'll call general partner within the transaction, and each one is a one-off transaction.
Yeah, so like how the process works is we're looking at a deal right now. If it's a good deal, we'll go in at contract, we'll do our due diligence, and then we'll go to our network of investors and see who'd be interested in partnering with us.
Okay.
And yeah, we put our money in the deals too, so we have skin in the game. We sign off on the debt, so if something goes wrong, we're on the hook for the loan as a general partner. But yeah, that's basically it.
So I had a couple questions ready for you, but I think we actually answered them. Tips on how you can get started in the business. If you were to look back, we've got people that are investors in our fund. We've got people that are trying to just get started in real estate investing, and other people that are kind of in the buy sell piece. If you were to look back on your brokerage, okay, what mistakes do you think, or what mistakes did you make early on in building your brokerage that you probably should, or that you look back and say, I wouldn't do that again?
Yeah, I think a big mistake I made was like trying to do too many like marketing strategies at once, trying to do too many things at once, right? I think just sticking to what works and kind of putting more fuel on the fire really helps you move forward. I think you can't be a jack of all trades. So being focused on, one thing and going all in on it was something that I needed to work on that I fixed lately. So yeah, that was one big thing.
Okay. obviously you work with a lot of investors, okay? People that are buying properties, that are maybe investing with other people in properties. What are the common mistakes investors make?
Yeah. The biggest mistake is just not knowing the values, like not understanding the values of a property that you're buying. Like, for example, if every house in San Diego is selling for $1 million, you don't want to be paying $1.1 million for that house, right? So that's a big mistake that I mentioned earlier. Another big mistake that I see all the time is like clients don't know exactly what kind of debt they're going to get on the property. So the loan, they don't understand, where the rates are today. They don't know how much they're going to put down. They don't know the term of the loan, stuff like that. I've seen too many people kind of go into escrow and then figure that out later, when you should be figuring that out before you actually go into contract. So that's a big mistake I see.
And that's why a lot of people come my way for financing, is because their current lender either can't come through for them, or they didn't have the financing lined up and they've got, a week to close. So that comes at those fall into my lap all the time. And then one last question, we didn't prep you for this one, but what, if you were getting in real estate, what book would you suggest everyone were to read?
Honestly, it's not real estate related, but the best book I've ever read in my life was Never Split the Difference with Chris Voss.
Yeah.
I think that's an amazing business book in general. A great book for real estate. What was a good book for real estate? I think a good one was this one by Bigger Pockets by Brandon Turner. It was like Multifamily Investing 101 or something. It was a really good book.
And for those that don't know Bigger Pockets, it's a great site. You can go on there. They have a ton of content about investing in any aspect of real estate. Highly recommend Bigger Pockets. Cool.
Yeah.
Well, hey, Jason, I want to say, number one, thank you very much for coming on today. It's such a pleasure listening to you. It's your story is exciting, kind of gives a lot of people insight into what it takes to be successful. It's not a quick and easy scheme getting into real estate. You got to pick up the phone. You got to make a ton of calls. And I always say, it's funny, that 6-month window is kind of your learning curve. That's your university time. If even in my business, it takes about 6 months to get your first loan done. If you're buying single family houses to flip, it's like takes 6 months for you to get your first deal. So that's funny. That's funny you say that. So I'm going to take over here and finish up. So if you can host disable participant screen sharing.
Oh yeah, let me make you the host.
Yep.
There you go.
Great. All right, I'm going to just pop up my, can everybody see my PowerPoint presentation?
I can see it.
Great. So I just want to end this with a quick preview of TaliMar Income Fund 1. It's our mortgage fund. When you invest in a mortgage fund, you're investing in a portfolio of loans. Imagine here you are the investor and you're investing in the fund. Imagine you are depositing funds into a bank, and that bank then lends that money out to borrowers. That's how banks earn income. Those borrowers pay interest on those loans, and that interest is distributed back to you as the investor. The biggest difference between us and a bank is we actually pay pretty well for your capital. So like I had mentioned, we have a little over 50 million in debt outstanding throughout San Diego. That's roughly, I think we're about 49 or 50 loans. And so that is all loans that those borrowers pay us income, and then we distribute that income back to the investor. The advantage of investing in a mortgage fund, number one, is passive. So you deposit your money when you want, how much you want. If you invest in TrustDeeds right now, you're probably pretty familiar with kind of the concept of investing in a mortgage fund. The big difference is, number one, you're diversified over a large portfolio of loans versus any individual loan. It also offers consistent monthly income. So every month you get a distribution, and you have the choice of reinvesting that distribution and earning compounded interest, or you can take that distribution every month. Third, it's liquid. So if you don't like the investment after a month, you can get your cash out, or if you want to invest more money in the future, you can always add to your existing investment. So for those that want to get into the details, it is a regulated Reg D 50, it's actually a 506C fund. Offering size is 250 million. And the current balance of the fund is at 32.5 million. So we've raised to date over the last 24 months, 32.5 million, which is fully deployed in loans throughout the San Diego market. Minimum investment is 50,000. And I'm super excited to announce that in January, we returned a yield of 8.8% to the investor. That's an annualized yield. So that's the highest yield we have returned. The nice thing about investing in a mortgage fund in debt is when the Fed raises rates, your yield goes up. So we charge more for our loans when the rates go up, obviously, and those returns then get paid to you, and those are higher. We have waived the lockup period. Common question that I get from investors is, Brock, can I get my money out before 12 months, which is a typical lockup period for a fund? And we've waived that lockup period. Now, this is for accredited investors only, so you have to have a net worth of $1 million or greater, or you have a income of $350,000 as joint, you and your spouse, or greater over the last 2 years. One thing I did skip over real quick at the bottom there is that we are structured as a real estate investment trust. So you're actually investing in a REIT. The benefits of investing in a REIT is that all distributions made from the REIT make you eligible for the 20% qualified business income tax deduction. What that means is that the distributions that are paid to you, you're only paying 80% and taxes on 80% of that income. 20% of it is a non-taxable event. A lot of mortgage funds are not structured as REITs. If you are invested in a mortgage fund, ask the fund manager if it's structured as a REIT. But that's one of the big advantages of our fund is that you are eligible for that 20% tax deduction. We focus on first trust deeds here in the San Diego market, single family, multifamily, commercial properties. We partner up with people like Jason and their clients to provide the bridge financing they need to close on properties. We have a huge network of people we work with, from real estate agents, brokers, mortgage brokers, direct with investors that come to us for our financing. Loan to value ratios, we typically lend up to 70% on residential and up to 65% on commercial. There are some caveats to that based on borrower experience, credit, and some other items, but that's kind of generally what we lend at. Loan sizes that we're lending on, roughly 250,000 to 3 million. And we're located, we fund throughout the state of California, but 80% of our portfolios literally here in San Diego. I like that because I can go down and drive down to the property, meet the borrower, get comfortable with the property. And then when we've lent that money, I can always drive by the property to ensure if it's a fix and flip loan that they're doing work on the property, or if it's just an existing bridge loan on, let's say, a commercial property, that it is still functioning as a commercial property. And we also focus on non-owner occupied properties. So we don't do consumer loans. If you're going out and buying a house for your consumer purposes, that's not the type of lender we are. We solely work with real estate investors. So right now, just want to finish that off. We are offering a credit of $1,000 to any investor that invests $100,000 or greater in the fund. So day one, you immediately earn $1,000 on your $100,000 investment. If you're interested in learning more about the mortgage fund, please contact me. Go ahead and put my contact information here. I'd be more than happy to provide you an executive summary or just kind of walk you through the investment process. If you are an existing investor now, we have a huge pipeline of loans coming through in the end of February. So we are actively raising capital. If you do have additional capital you want to put in the fund, we have space for it currently. As I had mentioned, we did return an 8.8% annualized yield in January. And so we anticipate returns to be above that 8.5% range over at least the next 12 to 24 months. So with that, Jason, I want to say thanks again for jumping on with me and answering and telling your story. We'll go ahead and post this on our YouTube channel. I'll go ahead and share a link with you as well. And so if you did miss the event, go ahead and follow the recording. Thanks, Jason.
Thank you.
Take care.